Hey everyone, welcome back to the Web3 Daily Briefing. Let's get straight into it. Market's been cooling off a bit over the past 24 hours. Bitcoin's been chopping sideways around 118K, no real momentum either way. Ethereum is holding strong above 3.7K, that's 17 straight days of net inflows into the ETFs, which is pretty damn bullish. Most alts are soft though, some top names starting to bleed out a bit. Overall vibe, cautious. Feels like everyone's just sitting tight, waiting for a clear signal before they make a move. Here's the take from Golden Ape. This is that annoying part of the cycle where you don't want to buy high, but it's not low enough to feel good about aping in. If you didn't catch the main leg up, don't expect to shortcut your way into gains now. Short-term plays? You gotta time events, not trends. ETH's holding up, sure, but let's be real, it's being propped up by ETF flows. If the institutional faucet shuts off, that thing's gonna wobble. Alright, let's talk biggest topic of the day. Ethereum turned 10. 10 years ago, on July 30th, the Ethereum mainnet went live, and the entire crypto scene's feeling nostalgic. Vitalik even joined the party on X, dropping old contract code and sharing stories. OGs are posting screenshots of ancient wallets, first gas fees, even their cringy 2017 ICO bags. It's like a digital high school reunion out there. But it's not just about memories. People are debating what Ethereum has become, and some of those takes are spicy. One common theme? Ethereum's no longer the idealistic geek playground. It's become a Wall Street asset, and ever since the ETF approvals, that narrative's only gotten louder. There are DeFi founders literally posting, the only ones making money on Ethereum right now are ETF issuers. You've got memes of Vitalik shaking hands with BlackRock CEO, saying stuff like Ethereum at 10, born in the garage ends up in TradFi. And honestly, they're not wrong. This birthday feels like Ethereum's identity is shifting from grassroots cypherpunk dream to institutional-grade middleware. Now, is that good or bad? Depends who you ask. Some think it's maturity, the chain's grown up, accepted by the big boys, others think it's selling out. Either way, this isn't just a birthday bash, it's a narrative reset. The next 10 years will be about whether Ethereum doubles down on financialization or finds a way to stay weird. Now let's get into the top stories. Story 1. Trump's White House is about to drop a full-blown crypto policy report, and everyone's watching? Yep. This one's coming directly from the president's office. This isn't some agency memo, it's the real deal. It's expected to outline a fresh crypto strategy for the US under Trump too, and insiders say it could be surprisingly pro-market. Here's what we're hearing. Stablecoin frameworks will be front and center, possibly setting up a path for US-backed stables to plug into the banking system. There's talk of creating a strategic Bitcoin reserve at the national level. Yes, like gold. It's expected to clearly say no thanks to a US CBDC, putting that idea to bed, and the report may propose opening Fed services to fully compliant crypto institutions. Big picture? This could signal a hard pivot from the hostile stance of the past few years to one that actively welcomes crypto development, as long as it plays by the rules. It's also perfectly timed. The Fed has a rate decision today too, so if Powell hints at easing and this report lands with a pro-crypto tone, we might get a sentiment surge. This report isn't just policy, it's a message. And if the message is clear, America's open for crypto business, expect capital to start flowing back in fast. Story 2. Hong Kong stablecoin regulations are going live on August honest, and they're not messing around. This is no draft or discussion paper, the rules are finalized and they start this week. Any stablecoin issuer operating in HK now has 6 months to comply or GTFO. Here's the framework. You've got 3 months to show you meet the basics. You get 3 more months to fully align. If your application gets rejected, 1 month to shut it all down. They also dropped full AML, KYC manuals, reserve rules, audit guidelines. It's full-on TradFi compliance. Only a handful of licenses will be issued initially, and they'll go to the players who are squeaky clean and well-capitalized. This is huge. HK isn't just regulating stablecoins, they're trying to turn them into financial infrastructure, and in Asia, they'll be the first to do it this comprehensively. Short term, it's going to force a lot of shady projects out. Long term, it gives real stablecoin providers something precious. Legitimacy. With the HK license, a stablecoin can now plug into DeFi, CeFi, cross-border payments, all with regulatory backing. And let's be real, HK's playing to win here. They're trying to be the settlement layer for Asia. If they get this right, they'll eat everyone's lunch in this space. Story 3. SEC just greenlit in, kind redemptions for Bitcoin and ETH ETFs, finally. This one's big for the ETF nerds out there. Up until now, if you wanted to create or redeem ETF shares, it had to be done in cash. No more. Now institutions can directly swap in BTC or ETH for ETF shares and take coins back out when redeeming. Why does that matter? Because it cuts down on conversion costs, makes arbitrage tighter, aligns ETF prices closer to spot, and streamlines trading flow for big players. It's also a huge W for the new SEC chair, Paul Atkins. This is his first major crypto move, and it's a bullish one. He's also opening the door to blended BTC plus ETH ETFs and loosening derivative limits. Translation: this is the SEC finally saying, okay, you guys have matured, let's get real. And with big names like BlackRock and Fidelity behind these products, this change will supercharge ETF liquidity and make it easier for TradFi firms to scale in. Story 4. Algeria just made crypto a crime. Straight up. New law just passed. If you buy, sell, hold, promote, or develop anything crypto, you can be jailed for up to a year and fined. This is next level aggressive. The law is called Act 2510, and it bans everything crypto related across the board. Wallets, exchanges, NFTs, even tweeting about crypto could get you in trouble. Authorities say it's to stop money laundering and terror financing. But behind the scenes, Algeria's economy is shaky, inflation's high, and youth unemployment is brutal. Crypto was becoming a lifeline, and this is likely the state pulling the plug to stay in control. It's unlikely to affect global markets much per Balgan's Algeria's crypto activity is tiny, but it's still a signal. While the West leans into regulation and adoption, some developing nations are doubling down on total bans. Story 5. Bitmain's building a factory in the US. Yes, the mining giant is coming stateside, but Bitmain, the biggest name in mining hardware, is setting up its first US production site, likely in Texas or Florida. It's happening fast, hiring has started, and output could begin by early next year. Why this matters? It's a hedge against US-China trade tensions. They get closer to their biggest customer base, North American miners. And it plays into the political narrative of bringing Bitcoin manufacturing home. Ever since China banned mining, the US has become the global mining hub. Bitmain moving in means the supply chain is following the demand. That's massive. Also, don't forget, this could boost Bitmain's brand in the West. Local production equals better trust, faster delivery, and way less regulatory hassle. It's a smart move, and it shows how crypto infra is globalizing in real time. Story 6. Kraken is raising $500 million at a $15 billion valuation, and it's eyeing an IPO. Yep, the OG US exchange is making moves. Reports say Kraken's in talks with major banks to raise $500 million, and they've already laid groundwork for a potential IPO as early as Kone 2026. Why now? Because the regulatory climate's finally improving, and Kraken's been playing it super clean, no tokens, no leverage chaos, just good old spot and staking. If this raise goes through, Kraken could become the second major crypto exchange to go public in the US after Coinbase. And you better believe that'll set off a domino effect. Gemini, Bitstamp, maybe even OKX, all of them could get pulled into the IPO wave. So this isn't just a raise, it's a signal that crypto exchanges are stepping fully into the mainstream finance arena, and they're bringing serious capital with them. Oh, this thing is... Alright, that's it for today. Prices might be calm, but the story's wild. We're watching regulators pivot, capital waking up, and infra getting built for the next chapter. Golden Ape says, forget short-term pumps. What matters now is where the big players are positioning. This isn't about luck anymore, it's about alignment, patience, and conviction. Don't FOMO, don't fade. Play your game. We'll be right here tomorrow with the next Web3 Daily Briefing. Stay sharp, y'all.